but we're still seeing earnings recovery on the ground. Earnings for Chinese companies both this year and next year are projected to be in double digits, and next year will be particularly strong. So I think we will see the recovery story play out and translate into earnings over the next 12 to 24 months, and that will hopefully then act as a mechanism or a catalyst for re-rating equities as well.
China is its own big beast, but for the rest of the world, and I know you've been pushing emerging markets in this discussion, but isn't the key question still, if the U.S. goes into recession, all bets are off? So how you figure that is what you want to do in EM, or no?
If the U.S. goes into recession, definitely there's huge repercussions for EM, especially for globally exposed stocks, so thinking Korea, Taiwan, the supply chain, etc. We are seeing more and more signs of decoupling between U.S. and China, which is a good thing, because if the U.S. does go into recession, we're still seeing 5% growth in China, so that will somewhat offset the effect. For us, specifically, we are staying very close to domestic themes. We are staying away from globally exposed stocks, and we're looking for true emerging market stocks that are exposed to the dynamics of local demand. So stocks like telecom, hospitals, medical services, stocks that are benefiting from growth in domestic markets.
And reopening, actually, when it comes to hospitals because of healthcare tourism.
Exactly. In fact, one of the stocks that we favor is a Thailand hospital stock called Bumrungrad, and it's exactly the thesis you stated.
Yeah, absolutely. Such a famous one. You know, the property tax story in China, in a sense, is a great little microcosm for looking at China. There's a lot of things that they would like to do, but they're held back a little bit because they're trying to, as I put it earlier, nurture this economic recovery. You'd almost think that they would be trying to remove some of the friction, some of the fees and charges, and some of the taxes that they have that are holding the economy back. Yet it just so happens that, you know, one of our big stories today is that they put in this registration system. It now would enable them to put in a property tax. Do you agree with our take that that's kind of a good long-term story, but might be disastrous at the moment?
Definitely agree that this may not be the right time to do it. Having said that, I think the government is more focused on reform that is going to help the technology, the data, the AI, and the semiconductor sectors right now, given what's happening with the U.S. and the rest of the world. So that's a theme where you're likely to see positive reform, versus the common prosperity story is sort of a long-term thing that they almost have to stick with, and they're not viewing that so much as sort of a short-term problem to fix. But I would expect more positive support for tech and semiconductor in the near term.
Indeed. So I want to get a sense also really of what you are looking at in terms of the geopolitical situation here as well. And is there any way of actually playing that?
The geopolitical situation is likely to worsen before it gets better, right? You know, with the U.S. trying to get Korea on its side and sort of ally all the Western nations together. The way we're playing this is to stick with smaller cap stocks, mid-cap stocks, and if you look year to date, small cap domestic Chinese stocks as measured by the CSI 1000 have outperformed MSCI China by almost 8%. So that's, I think, a thing that's likely to continue, which is small cap stocks, stocks that are geared towards the domestic economy, stocks that are not in technology. We're looking at consumer staples, we're looking at telecom, stable cash flow yielding stocks that are unlikely to be impacted by the geopolitical situation, or at least likely to be impacted less than high momentum, high volatility growth, or staying away from those themes.
In the big, broad macro story and what the Fed does and how the U.S. economy is doing, one final question. We talked about the diversity of outcomes. Today you had the earnings from Visa and Chipotle and McDonald's that were all pretty strong and looked pretty solid. Microsoft and Google, you know, the big monster tech companies, also very strong. And yet, you know, we've had a lot of misses too. How do you put it all together into a strategy?
Yeah, I think dispersion is going up, definitely, in the U.S., but also across the world, in China as well, right? We've seen sectors really outperform them. We've seen information technology, consumer discretionary be super volatile, actually down for the year at this point. this distortion is really creating a strong opportunity for active management for stock picking. So again, we see the way to play this as sticking with strong, consistent dividend yielding stocks, sticking with domestically oriented stocks, sticking with mid-cap, small-cap stocks, and staying away from high momentum, hyped themes like batteries or even very high growth internet stocks.
Pooja, thanks so much for joining us. Pooja Malek, partner at Nippon Capital. 21 and a half minutes past the hour. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash. All right, we've got Bloomberg Daybreak Asia, brought to you by Interactive Brokers, Bond Marketplace. Access a vast selection of over 1 million global fixed income securities with no markups or built-in spreads and low transparent commissions. Learn more at ibkr.com/bonds. Well, has the reopening story for China run its course? That's a question that investors are really at the moment grappling with, and it seems that geopolitical headwinds are putting pay to any enthusiasm surrounding the end of the COVID-0 policy. We did have losses on Tuesday, dragging down the Asian benchmark, which will start the day at a 1-month low. Traders are blaming U.S. plans to limit investment in key parts of China. They've also really ignored recent better-than-expected economic news as well. Now, also adding to the downward pressure was Wall Street's lower day as well, for stocks at least, where we saw U.S. equities dropping the most in 2 months and Treasury yields retreating after really First Republic banks had disappointing earnings and potential asset sales. So there you go, 10-year yield at 3.39%. Okay, well, let's just quickly have a look at what else is happening out there and just get you over now to global news. And we've got Ed Baxter.
All right, thank you very much, Rich. Germany is openly announcing today it wants to improve its relations with China in the coming months. Chancellor Olaf Scholz has invited Chinese premier for talks in Berlin, June 20th. It is official. President Joe Biden launching his 2024 campaign for re-election. He attacks what he calls MAGA Republicans for attacks on the government and freedoms of U.S. citizens. GOP presidential candidate Nikki Haley is out today talking about the issue of abortion, which is sure to become a major campaign issue. She says what is needed is consensus. China will no longer require travelers to the country to provide a negative PCR test result. Disappointment today at the end of Japan's iSpace landing process on its mission to the moon. It stopped communicating at the time of landing. South Korean President Yoon Suk-yeol is ready to visit the White House with some very direct messages: security and leaking of intel. Global news powered by more than 2,700 journalists and analysts in over 120 countries. In San Francisco, I'm Ed Baxter, and this is Bloomberg. All right, Rich.
All right, let's get to earnings. And Texas Instruments, this one, the latest chip company to issue a lackluster forecast for the current quarter. Let's get to Ian King, Bloomberg News, U.S. semiconductor reporter. Ian, walk us through the details here.
Yeah, I mean, what was going on into this is that because Texas Instruments has such a broad reach, investors are kind of looking for the bottom of the cycle. As you know, the chip industry is very cyclical. TI has a broad reach, so what can they tell us about where we are? Is it time to load up? Are we through the worst of it? And the answer they got was probably not.
Yeah, it's so difficult because, this whole industry has a couple of cycles, a cyclical cycle and also a secular cycle. And the secular part, I say that in the sense that it was very much disrupted by the pandemic. But looking at semiconductors as the new transports and giving us an indication about where the economy is going, this is a thumbs down, as you say, Ian, right? And is there any sense in the timing of that?
Yeah, no, I mean, that's a question that everybody wanted the answer to, and that's the one that TI kind of stubbornly refused to engage on. I mean, the only detail they gave was like, look, if you're talking personal electronics, that business kind of went south 4 quarters ago, so that's probably nearer the end of the bad period than other parts. But guess what? Industrial is just beginning to roll over, and automotive is still fine. Nothing has happened there yet, so very difficult to take the sum of the parts and make an educated guess. They said typically things tend to sort of roughly go in line, but here we've got a wide divergence of end market behavior. So it's kind of difficult to sort of pick something out and take a general trend from it.
But Ian, is it true with TI and even with some of the other makers of these products that they don't go bad? I mean, they if they sit on the shelf for a while, okay, but they can be sold later.
I mean, it's very, very specific to the company. In TI's case, because they're making basically chips that are sort of more simple, they could be around for years. We're talking power converters, we're talking microcontrollers, that kind of thing. But if you're making what Intel makes or NVIDIA makes, that's absolutely not the case. Pretty much all of their product range sort of rolls over every year, so you really don't want to be having, 100, 200 days of inventory. In TI's case, it's very different now.
Are they worried about the semiconductor ban with China, and what do they say about that?
Yeah, I mean, that wasn't the topic of conversation today, and as a general rule, this is something I think that investors have got kind of ingested already, that this is the path that we're on, and, we'll just hope that other areas come up to speed and kind of replace what's going on in China. But no, they didn't get asked about that today.
And in a sense, I suppose, because of the types of chips that they make, is there a little bit less pressure on them to somehow manufacture more in the United States?
Yes and no. I mean, what they've said, they've kind of broken out of what they've done historically, which is to outsource quite a lot of production and only really do what they had to do in-house. And what they've said is, we're going to reverse that. We're going to produce more here. They've committed to building factories in Texas and buying a factory in Lehigh, and saying, look, we're going to do more ourselves. We're going to build more ourselves because that makes sense. We can actually squeeze out more profit dollars from doing that. In the short term, though, that's cutting into their cash flow, and as you know, investors are like these guys because of the dividend payments and because of the buybacks, so that's going to come a little bit under pressure, and they didn't back off that stance today. The CFO just told me on the phone, he was like, look, we're not going to get the wobbles here. We're not going to be intimidated by short-term fluctuations. We're going to continue on this long-term policy.
Yeah, actually, very good information. I don't know why I said actually, I mean always. Very good information. Some news you can use, and I definitely learned something. Thank you. Ian King here, Bloomberg News, U.S. semiconductor reporter. Desperately trying to get up the stock price here. It is actually trading up 1.6% in after hours, but like a lot of these companies, all dragged down in the session. TI dropping 3.7% on Wall Street. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Daybreak Asia.
It's nearly 6:30 in the morning right here in Hong Kong, and in Singapore, nearly 6:30 in the evening on the Atlantic seaboard of the United States. I'm Rashad Salamat.
And I'm Ryan Curtis. It's going to be an unusual session in Asia because the downward push during the regular session on Wall Street was matched by a lot of gains in futures after the bell. So SPE minis are up 0.5%, NASDAQ futures up even more. But one sense is that we will still see a little bit of a downward push here in the Asia Pacific. Most of the futures, Hang Seng Index futures included, are down, and that contract down 0.9%. We'll get to the markets in a while, but right now some of the top stories of the hour.
Right, we're looking here at what has been going on at UBS after it came out with the weakest quarterly profit in more than 3 years, saying that the first quarter revenue at its wealth business fell shy of analyst expectations. The results overshadowed the $28 billion in new money that came from rich clients during the quarter. Even so, UBS CEO Sergio Ermotti told us that the inflows are still a good sign.
The first quarter was very challenging. We still saw clients looking at UBS as a safe haven, and the inflows were coming in from all regions and from different places. And in that sense, we are very pleased that, particularly also after the announcement of the transaction of the acquisition of Credit Suisse, we still saw inflows coming into our bank. So a sign of confidence of our clients.
Meantime, UBS says it's likely to report a gain of as much as $57 billion in its second quarter profit once its takeover of Credit Suisse closes. Bank expecting that deal to finalize in May.
General Motors beat first quarter profit estimates and raised its full-year earnings and cash flow guidance. GM saying the stronger results are because of rising sales in the United States. And North American demand was enough to offset weak performance in China, where sales were down 25% last quarter. We heard from CFO Paul Jacobson.
China, obviously very competitive, but still coming out of COVID, and we see demand recovering, but it's also an incredibly competitive market. The team there has done a great job. We were able to maintain profitability in Q1, but we think second quarter is going to be a little bit challenging, and then we'll start to see some improvement in the back half of the year.
Separately, the CEO, Mary Barra, said the automaker's commitment to a goal of increasing output of electric vehicles to 1 million a year by 2025. This comes despite the company indicating that costs for commodities such as steel are higher than expected. GM shares closed down 4% in the regular session.
Right, let's check in with some of the stories making global headlines. South Korean President Yoon Suk-yeol is ready to visit the White House with some very direct messages. Ed Baxter has that and more.
All right, thank you, Rich. President Yoon has stressed trust ahead of high-stakes talks with President Joe Biden. Yoon is looking to align more with the U.S. on China and Russia. The relationship is morphing from national security to increasingly becoming global. And former U.S. Secretary of Defense William Cohen on Bloomberg's Balance of Power says security of intelligence as well. He says the U.S. has gathered that information now for years and years.
We try to collect information on everyone, our friends, adversaries, enemies, everyone. Our our main goal is to protect the American people. To do that, we have to have all-around knowledge, all-around vision, and look at everything that is happening, friends and foes alike.
So full plate for Yoon and Biden. To nobody's surprise, Joe Biden is running for re-election. He announcing quietly using a slickly produced video, which opened with a video of the insurrection and then blamed what he calls MAGA for trying to ruin people's lives at a labor union rally after the video's release.
Our economic plan is working. We now have to finish the job, but there's more to do. And you're leading the way. Shovels in the ground, cranes in the air.
And Bloomberg's Mario Parker says time to bring in some money.
He's ready to start getting out there. Our reporting shows that he'll have donors coming to Washington this weekend, meeting with him individually and some of his key aides also. So it's time to start making some money.
Yeah, Mario says Biden's campaign is relishing that thought of running against Donald Trump. And Trump is threatening to skip the Republican